Hello everyone, Charles here with SlickTrade.net, and in this presentation I'm going to go over our market commentary for the upcoming week. I do apologize for last week. I was having some issues, computer issues, internet issues, all kinds of stuff, along with a family emergency, and I just could not get things set up in time and make it happen. So here we go, okay? For the upcoming week, we've got the New Zealand dollar on the 4-hour time frame here, and this screen might look a little bit different from some of the other market commentaries. That is because I had to install it on a new computer this last week. So from here on out, this is kind of how it's going to be looking. I like to have on the 4-hour time frame somewhere around a 50 pip range or under. Okay, usually 25 to 50 is pretty good. So we like to base this on previous support and resistance. Okay, so if you look back, if you're new to trading, any of that, history repeats itself. Okay, I know I say this all the time. Please excuse the helicopter that is going over right now. Oh yeah, the screen looks way different than my old one. Let's see here. Let's wait for that to go by real quick. Wow, it's taking a minute. I'm just going to go ahead and plot these out here. Okay, we give a 32 pip range right here. I based it on previous support and resistance. Here we've got a lot of wicks. Actually, you know what? I'm going to bring this up right here to these candle bodies. And then here, same thing. You like to really identify where a solid previous support resistance is. If you look at the professor setup, overall it is showing along. That break happened back here. We did already have a rise, and price is definitely in a consolidation period following the previous downtrend, which went on for quite a while, or previous short trend. Okay, we are broken above that now, and we did have some beautiful patterns set up here on the 4-hour, but we'll see what these upcoming weeks have in store for us. Okay, let's grab the upper portion of this range. Make sure you're trailing your stops to get the most out of every trade. And make sure that you're protecting by using stop losses and take profits. Okay. I personally like manually trading over any other form. I do love the mechanical side of things. I do love expert advisors. They're great for alerts, but I still, I like to use my brain. Okay, your brain is the most powerful trading tool that you can have. Okay, so please always remember that. If we switch over from the New Zealand dollar 4-hour time frame to the daily, as you can see, it is still showing a short. Okay, we're seeing some resistance here and some consolidation really within these two levels here. When I look at the daily time frame, I really like to look at 100 pips or less. Okay, and these are trades that you stay in longer. These are my favorite type of trades. When you base your entries on the daily time frame, you end up normally with better results. Okay, you stay in trades longer. This is a more accurate set of support and resistance, but I do know some people don't like the longer term trading. That is absolutely fine. Just find what works best for you in your style of trading. Okay, and always, like I said, use proper take profits and stop losses. If we look at this daily time frame, Overall, we are in a short. Short as far as the professor is concerned with B-bands. Short as far as being under a Hull moving average. Talking a little too fast. We are in between supply and demand zones. And as you can see here, we are fluctuating in these levels here. But when you are in a consolidation period, it does not mean that you cannot gain profit each week, okay? You can still set solid, support and resistance levels, and then use that 4-hour time frame to break out from those, okay? Or you can just use the daily. I really just like to use the daily. It's my favorite. I apologize for all the helicopters. I don't know what is happening out there. Let's plot some more take profits here. Hope everybody's okay. There we go. Proportion here. If you look at the daily time frame, if there's a trend, a very visible trend, then sometimes I'll use the 4-hour time frame for entry. But let's say there's a short trend and it's a very clear one, not what the New Zealand dollar is in right now. Right now we're in a consolidation period. But if you see a very clear trend, then other helicopter. So sorry. Jeez, going crazy today. If you are in a very clear trend, then let's say it's a short, then you can sell or go short on rises in the market and vice versa for a long, okay? That's usually the only time I really use the 4-hour personally for entry, but again, it just depends on your trading style, okay? Well, let me make sure. I forgot to clear the expert advisors off of here. And hold on. I created a new template. There we go. That kind of wipes things out for me. Perfect. So otherwise I lose the range that I put in each week for you guys. So definitely in a bit of consolidation here. It looks like we're pushing up to go into a long. We are creating higher highs, higher lows on the Aussie dollar 4-hour. But we'll see, what these upcoming weeks bring. And again, I really like to look at that daily first. Okay. Identify that support resistance. Once we get the full confirmation from the professor setup and those B-bands show along, then that's a pretty good indication that we are going into a long, at least for, a few days to a week on that 4-hour. Sometimes multiple weeks, sometimes multiple months. It just kind of depends. But I do still like that, looking at that daily. Okay. There we go. we look at the Aussie dollar daily, it's showing a short, okay? We are below the whole moving average, but you can see here kind of that same thing that's happening on that 4 hour. You see those little pushes up. But we have not created a new high, really. I mean, if we want to create a new high, we need to break up into this kind of zone here, or even above the 0.75027 level. So really, until that happens, that is not a confirmation for me on the 4 hour that things are turning around yet, okay? Unless if you really just like that, you know, intraday trading, if that's your style, that's totally cool. It's just not quite mine. Make sure within that 100 pip range. Put in a few take profit levels based on previous support and resistance. Or if you prefer supply and demand zones, I mean, that's going to get you kind of the same thing. If you're not used to being able to identify them, then definitely use the indicators in the room. That is going to give you a good indication of what is happening. And some pretty solid zones overall to get that support and resistance. And here goes another helicopter, guys. Sorry. There we go. Dollar franc, we had a really aggressive push up once we crossed that whole moving average, or got real closer pushing. And then if you were watching this last week, I believe this was on Friday, Thursday, Wednesday. Yeah, there we go. That was a definite aggressive push up. Okay, so when that happens, a lot of the time it is due to news releases. Not always. That's when you can go to the site under free education. You'll see news. Internet is running a little slow today. Let's go into last week. Jeez. There, apply. Okay. So Wednesday here, and that was the dollar franc. Yep. Non-farm employment change. That almost always causes an aggressive rise or dip in the market. So that makes complete sense right there. And that affected the dollar. So that is kind of why. So with that being said, a lot of the time following a release like that, you will see price correct itself after that, okay? So have it come back kind of down, all right? So you may see an initial dip. And sometimes you'll see it push a little higher, okay, in this upcoming week. But most of the time, price does correct itself and kind of head back down. Could head back down around this level here, 0.91003. But we'll see, okay? That's just kind of the nature of that, okay? So for now, what I'm going to do is I'm still going to do our market commentary like we usually do. Just know that price could absolutely correct itself, okay? initially. And then it could just head back up, continue down. You never know. Okay. I think my mouse is dying here. Let's see if I can do this video. Okay. The dollar franc on the daily. You can see that rise there as well. Okay. Switch my template over. I'm going to go ahead and pause the video. We got another helicopter, and my mouse is dying, so I'm just going to pause real quick. Okay, now I have some new batteries in here, and the next helicopter has gone over. Let's see here. Where was it at? USDCHF 4-hour time frame. Okay, here's the daily. Again, on the daily, you want to make sure that you're within that 100 pip range, but usually try to do a little over 50 at least. Especially with that rise being there, I really think price might initially head to the downside. Just kind of the nature of a news release like non-farm payroll. But we'll see. Okay, let's put in some potential take profit zones, levels. Okay. Overall, if you zoom out on the daily, we are in a long time frame. However, we're kind of in a triangle trend here. You can see that. Price is making up its mind where it wants to go. This is where we have to be patient. We'll probably experience a little bit of consolidation in these upcoming weeks. But we'll see. I mean, price really is trying to push up, okay, higher. But like I said, in those triangle trends, we wait for a break to happen. If we look down here at this lowest point, kind of bring this up. And then same thing here. And you can draw this real steep here at previous high, which would be this area. Okay. Oh, shoot. And zoom back in here, and you can see where price could potentially hit this upper and lower portion of the trend line. If you have a break to the upside or downside of one of these, then we'll know a little bit more on which way price is headed. But you may see this get a little tighter and a little tighter before an actual break occurs. So, like I said, with that being said, for the upcoming week, upper portion of the new defined range will be here. Key level. Here. Screen screenshot. Now, euro dollar, we had the absolute opposite happen, and that's normal because the euro dollar and dollar franc are mirrored assets. Okay, so when one is going one way, the other is usually going the other way. Okay, so as you can see, price really, it broke down and pushed right back to a previous low here. So I think we might see an initial correction. Like I said, kind of up. You may see a correction up around to the 1.17916 level. Just with there being non-farm payroll like that. But as far as our new defined range, 4 hour, we like to stay within that 50 pip range. So we will see what happens. I usually, when it comes to waiting for price to correct itself or not, or show which way it is actually going to go, that can take up to a week. Usually it's within the first few days following a release like that, but sometimes it can take a little bit longer because sometimes that push will continue, and it kind of depends on what's happening in the world around us. Okay, so we'll just see. Just be patient. Like I said, always use proper stop loss, take profit, all that. It is very important. It's also important to trail your stops, like I've said a million times before. You really want to protect your profit. Don't ever treat trading like a game, okay? You don't want to gamble with your finances. Treat it like a business. Take it serious. When you miss out on some pips, that's all right. When you miss out on a trade, that's all right. Wait for the next one. There's nothing wrong with that. You want to be patient as a trader, and you want to think about your future. So as far as the upcoming week is concerned, upper portion here, again, wait for an initial correction potentially, or at least be prepared for it when entering any trades. Is very important. Or play off of that, expect it and play off of it that way. It doesn't always happen though, so you really want to be careful. Make sure you definitely have, proper stop loss and take profit in there. Pound dollar on the daily time frame, it's really all I look at here. Price set up for a short. We have been waiting for it for a while, and it did finally happen, but then we had a correction back to where price previously was. Okay. Overall, though, it did not create a new high. Okay, we're still following suit to that. If we draw in a trend line, that's a pretty solid trend line right there. And even from previous high. Okay, so if price breaks above here, we could see it head up to here. Okay. If it breaks right around the 1.39487 level, you may see it head up to 1.40009. We will see, like I said, what price delivers, what the market delivers. This could just be a bit of consolidation period and then continuation, but it does seem like price is following suit to that actual short trend. As far as the professor is concerned, you know, we broke below the whole moving average. We have created lower highs and lower lows. We broke below here. The B bands showed short. Everything is set up for that short, but we do have that correction phase up. So at this point, this is a pretty solid short entry. But really watch, like I said, that 1.39487 level. Okay, that is a key level for us. Okay, if price breaks above that and candle body holds, then we could easily see it continue up. Okay. Here are a few take profit levels for you, no matter which way it goes. Okay. We do want to make sure that we're within that 100 pip range. It's kind of cutting it a little closer. Let's bring this down to candle bodies. Okay. Okay. So we have a plan for the upcoming week. Overall short at this point, yes. Look to go short on rises, which that is where we're at right now. If you just follow the trend. But protect that profit, and like I said, watch that one level there. It's pretty important. And there we go. So you guys have a good one. I'll see you in the room. And cheers to another successful week of trading.